Oh my god, this burping is killing me. Sheesh. Come on, bruh. I ain't got time for all this. Alright. Alright, what's going on, y'all? Welcome back to the Investment League. This is where we are currently on this account. If you're new and this is your first time checking in to this channel, what I'm doing here is using this account to grow a long-term and a short-term portfolio. So what that means, what I mean by that is I'm using this money to invest in the stock market, and I'm taking the money that I make and I'm taking a portion of it, taking it out and paying off my debt so I can become financially free. And then I'm taking the other portion of it and reinvesting in the stock market so that I can grow this account and have a nice size portfolio. So as soon as I'm done paying off all my debt and I'm debt free, I'm already set up with a nice size portfolio to start growing. So instead of waiting until my debt is all paid off to actually start investing, I'm both using this account to do that, and I'm using some of that money so that I can start growing it now. Because if you're familiar with the stock market, or if you're familiar with investing, the most important part of investing is the compound interest. So if I can invest a little bit now, then in 5 years when I'm financially free, all of that money that I've been investing is compounding, right? So even if it's just a little bit goes a long way in the long run. So updating my account, I'm actually going to secure some profit right now. So you guys are going to be able to see that happen live. But I'm going to go over my stocks. This is my long term. And what I'm thinking about doing is actually switching out of Robinhood and probably going to go to like E-Trade or Fidelity or something like that. One of the more, well-established, well-known brokerages, especially because I'm doing options. So because I'm doing the option portion of investing, Robinhood isn't the best to do that. So I'm going to go ahead and get out of Robinhood eventually, probably today or tomorrow. And I'll show you guys how to open up an account. So if you haven't started yet, you can follow along with me in opening up a brand new account and see how that process goes, and funding it and seeing, basically the whole process. So here I go, enough rambling. I'm in Apple. As you can see, I'm up $4.91. I have $42 in there. And if you've been following along, this $42 is not my money. This is money that I made in the stock market. So this entire investment is free. Then I'm going to go to UNH. This is another investment that I made. It's been going sideways, so I'm only up, 37 cents, which is all right. You know what I'm saying? This is a long-term hold. So I'm looking at it in the long term. As you can see, it's up 22% in the past year. So if I have $100 in there, I'm making 22 bucks. That's basically how you can calculate it. Just do everything by 100 to get the real dollar value. This AT&T, probably not my smartest investment, just because AT&T has been going down. As you can see in the year, it's been going down pretty steadily. The only reason why I got into AT&T was because of the dividends, which I noticed later on, it's not really worth it in a company that's going down. So even though the dividends pay well, you still want to make sure that you're investing in a stock that's continuously improving. So I might have to get out of this and just chalk it up as not a loss, because I'm only down 12 bucks, and you can see I'm up way more than 12 bucks on my other positions. So that's why you want to diversify, because if I put all my money in AT&T, I'd be down by so much, where I could have put it somewhere else and made money. So that's the key to diversifying, is having your money spread out so you can find out where the winners are and then invest in the winners. So I might take some out of here and maybe put it somewhere else, like DraftKings. You can see DraftKings. I played DraftKings pretty well. I'm actually pretty impressed with myself on this one, because when I first bought DraftKings, it was trading at $53. Right here, $53.46 when I bought 2 shares. Then I bought 2 more when it went down to $45. So these 2 shares right here is why I'm up by so much. Right, DraftKings is now trading at 59, so almost 60 bucks. So off of those 2 shares alone, I'm up 30 bucks. And then I got the first 2 shares. So DraftKings, I'm doing really well. I'm already up 20%, which is amazing. A lot of people use 20% as a profit taking zone. So what I could do is sell a share, right, and then take that money and invest it somewhere else. That's one strategy that people do. I'm still debating on how I want to play all of this, but that's basically where we're at with DraftKings. So DraftKings was a great investment. Apple's always a great investment. And then I have my Bitcoin. So Bitcoin was down for a while. It went up and then it came down. I've already taken profit on Bitcoin, right? And now it's going back up. So we're doing pretty well in Bitcoin. I already took profit, like I said, about $100 out. So I'm up $57 on my investment. I only have $125 in there. That's where I'm at on there. Where I'm going to take profit is on my options. So let me explain these real quick. If you're really confused on all of this, either listen to it a bunch of times until you get it, or try to break it up into pieces, right? But basically, this is what I did here was I opened up what's called a debit spread. So the way that a debit spread works is that you buy one option and then you sell another option, right? At the same time. So what I did was where am I? I bought this call January 21, 2022. So that's when this option expires. So basically, by the time that this expires, I'm either going to buy the shares at $130 a share, or I can close the contract beforehand and just get my money back. So when I opened this one, I had to pay $2,155 to buy this option. So right now, this option is worth $22.40. So if I sold it, I would make money, right? Because I'm selling it for more than I bought it. But because I have a small account, I can't afford to pay $2,155 for this option. So what I did was I sold the one above it, right? And this one was a little bit cheaper, but all I had to pay was the difference because I'm buying this one at 21 and I'm selling this at 19. So I paid about $200 for this instead of paying 2,100. And then what I want to do is just try to collect profit on here. So I'm up 6%, about 15 bucks. So if I close this right now, I would make $15 from this investment. And that's the way that this works. So if you want to get into options, but you don't want to spend as much money, you can do credit spreads or debit spreads. Credit spreads is basically the opposite. So on debit spreads, you buy the expensive one and sell the cheaper one. On credit spreads, you sell the expensive one and then buy the cheaper one. So because you sold it for more than what you bought it, you get money up front. So those are a little confusing. It's advanced. So if you're applying for options, when you get started, this is level 3. So you have to get to level 1, level 2, and then level 3 of options before you can start doing spreads. They want to make sure that you know what you're doing before you enter spreads. That's where I'm at with Apple. I'm still debating on what I want to do with this as well, because I might just close it and then transfer all my stuff to like E-Trade and then open everything back up. But if that's the case, I might not be able to do options or spreads right away. So we'll see how that goes, but that'll be an interesting transition to follow along with. So those of you who are new and haven't started yet, you can definitely follow along and see how I go about opening up a new account and funding it and starting to invest in it. That way you can follow along and do the same or something similar. You know, none of this is financial advice. I'm not a financial advisor. This is not a recommendation. It's just so that I can be transparent in everything that I do. So if you have any questions on anything, you can see firsthand how it's done. All right, so these are the two positions that I want to close because I'm basically at max profit. So this was a credit spread. So the opposite of a debit spread is a credit spread. So what I did was I sold the expensive one right here. I sold this one for 75 cents and I bought this one for 40 cents. So the difference between 40 and 75 is 35. So I got paid $35 because everything's worth 100 shares in options, so you have to multiply that number by 100. So 35 cents times 100 is $35. So I got paid $35. That's the most that I can possibly make, but I don't really like to hold things all the way through. I'm pretty much at max profit right now. Anything over 80% to me is profit taking when it comes to spreads or options in particular. So I'm up 80%. So what I want to do is actually close this. So in order to close this, I have to buy it back. So I'm going to buy it back for $4. So what I'm looking to do is make a profit of $31. So let's see what happens. All right. So if I do this, I got filled right there. So it cost me $4, but I got $100 back in collateral. And what that collateral was is the difference between the two strike prices. So if this ended up going below $4, then I would be forced to buy the shares at $5 a share and then sell them to somebody for $4 a share. So the difference is 100. That's why I had to put up $100 for this. I got paid 35. So in reality, I only risked $65 to make 35. So it's a really good risk to reward ratio. I'm gonna go ahead and update my spreadsheet real quick. All right, so here's my credit spread. So I finally made money off of this jaunt. I locked it in. So this is money that I made this week. It's gonna be 31 bucks. All right, so $31 off of this. I'm gonna go ahead and make this white. Indicate that it's no longer in play. All right, let me save it. Bam. Bada bing, bada boom. All right, now I got one more play that I want to close. So when I go back, my cash, my buying power went up. Now I'm going to close this solo put. So instead of doing a spread, this is just called a naked option because it's by itself. It's not put in a spread form. So when you buy puts or sell puts, you're saying that you think the share price is going to drop. So this company's solo is at $8.24 per share. And what I did was I made a contract agreeing to buy the shares at $7. So nobody's going to sell me the shares for $7 because they can sell it for $8.24 and make more money. But if Solo was to drop down to 7 or below 7, then I would have to buy the shares at $7 a share, 100 shares. But because Solo is going up, the value of this contract is going down to only $4. So I'm looking to make my full profit. Well, I'm looking to make a profit of $30. So I'm gonna try to close this too. And then if I do this and it sells for $4, I buy it back for $4. I'll make a $30 profit, and you can see I get my collateral back. So right there, look at that. It actually sold for $3. So I got $31 on this one too. That's what's up. So I locked in my profit. You know, this isn't gonna go much anywhere anymore. Let's see here. Bam. So Apple's the only spread that I have open, and I'm holding this for the long term. This is a long-term play. And as you can see, my buying power is now basically way up there. I only have like $1,000 put in the stock market, which is this right here. Everything else is cash. So this cash is not making me money. You know what I mean? The only thing that's making me money is the money that I have in stocks, in shares, and then this spread. So I want to look to use this money to make more money. And that's basically what I did just now. I had all this money in my options to make me that $62 that I just made. So I'm going to go ahead and close that one too as soon as I can find it. Right there, man. That's crazy. So I made I just locked in $62 of profit right there. You know what I'm saying? That's $62, y'all. You know what I'm saying? $62 I did not have before I opened those plays. So when you're looking to invest, investing is you making money with your money. Instead of going and clocking in and doing labor for somebody else, you know, doing a job that somebody else wants you to do, you can put in the work yourself, use your money to do it. I opened those spreads a long time ago. If I go back, I opened this one on January 11th, this wheel, and then the credit spread I opened on December 30th. So basically for the whole month of January, I've just been chilling. You know, I've been going about my business, not looking at these plays in particular, just letting them work. You know what I mean? And today I decided to close it down, lock it up, collect my $62, easy money. I got all my money back that I had invested in these two strategies, and now I'm good to go. So that's just stock market right there. You know what I'm saying? Easy money. Easy money. If I do the math, let me see here. So I made $62 and I used 800 because I had 700 for the put, 100 for there. So that's a 8%, almost an 8% return on my investment, which is basically the average of the stock market. The average of the stock market is 10%. I made 8% and I only used $800 to do that. You know what I'm saying? I didn't even use my whole portfolio. So that just goes to show you the power of investing. You're already beating, you're already beating the banks. You're beating the high interest yield banks, the CDs, and you're moving along with the stock market. So now what I want to do is I'm thinking about implementing basically what I'm preaching, which is funding your account periodically, frequently, consistently. So what I'm probably gonna do is put $100 in every month, and then take that $100, invest it in the SPY, and then invest some of it into an actual stock, and then see where they're at the end of the year. So that's the next order of business. Whether I'm going to do it on Robinhood or on another trading account, another trading platform is still up for debate. I'm still debating which one I want to do, but stay tuned for that. If you guys have any questions on anything that just happened right now, please leave a comment down below. Let me know what you guys think. Let me know what you guys need help on, and I'm there. You can follow me on my podcast at the Investment League Podcast. You can ask me questions on there too as well. So I'll catch y'all on the next one. Thanks for watching. Peace. That was a long ass video because all I do is ramble. Should call me Rambo. That's my new nickname. Rambo Slice. Holy shit.